Debt consolidation makes sense only with low interest rates. Credit that cannot be managed or is not being repaid requires debt consolidation. Debt consolidation offers borrowers with a chance to repay their high-interest loans at low interest rate. You must be thinking, it sounds good, but how is it possible? How can high-interest loans repaid at low interest? This is how debt consolidation works. It replaces multiple unsecured loans with single loan. As compared to several different loans, you obtain one single low-interest rate loan. The single monthly payment on this loan is divided to repay the individual loans. This will also make your debt situation manageable. Debt consolidation should be accompanied with low interest rates, otherwise debt consolidation doesn't make any sense. It is almost mandatory to find debt consolidation with low interest rate. Otherwise, it would mean financial mishap of the worst kind. You might end up paying more in the long run. Debt consolidation plan can have serious shortcomings too if the plan is not carefully structured. Finding a good low-interest debt consolidation is not always easy. However, an extensive research can certainly open ways to find one. First of all, it is important to understand that your financial situation is unique, so what works for your neighbor might not work for you. Your debt consolidation plan will be as unique as your financial status. While looking for debt consolidation, keep in mind why you are looking for debt consolidation. You are trying to cut off your monthly payment, looking for low interest rate, low fees and a loan term that does not stretch beyond a few years. A longer loan term with low monthly payments would mean paying more. The debt consolidation loan should not stretch beyond 3 to 5 years and maximum up to 10 years. There are numerous companies offering debt consolidation online. Settle on a company which offers low interest rate debt consolidation with least hassle. The way to debt consolidation is through credit cards. This debt consolidation would not require you to place collateral, so it can be a good option. Good credit history would provide you with low interest rate. Ask your current creditor what interest rates would be offered, in case you transfer balances from other credit cards to theirs. A low rate that is fixed with no transfer fee would be ideal. Otherwise, shop for a new credit card. However, don't go overboard with your credit search. Numerous credit applications would have a negative impact on your credit report. You can use equity in your house for debt consolidation at low interest. The 100% refinance would tap the equity in your house to repay loan and bills. Refinancing at low interest rate would mean getting rid of high interest rate loans with low monthly payment. Another way to tap on the equity is equity home loans. Home equity loan with fixed interest rate over a fixed period of time is an option. Also, you can't take up home equity line of credit. Here you borrow up to a pre-approved credit limit and borrow more if you still have money. These loans are offered with low interest rate and good repayment options and have great deals. With home equity loans, however, there is always the risk of losing the property if you fail to repay. The debt consolidation loan that is unsecured would not come with low interest rates. Since you are offering no security, they imply risk to the loan lender. A loan lender would try to minimize his risk with higher interest rate. But with good credit, you might find exactly what you need. Try to look for another way to debt consolidation if interest rates are high. Calculate the cost of the entire loan term before you settle on a debt consolidation loan. Debt consolidation sounds like a very beneficial proposition to most of the borrowers, but it may not always be good for your finances. It is possible that with debt consolidation you end up paying a lot more interest rate. It is very essential to know whether debt consolidation is serving the purpose it is opted for, mainly lowering interest rates. Debt consolidation works as a boost to your credit situation. If you are looking for debt consolidation, you would be treated favorably because you are making an attempt to repay. And if you make your repayments on time, you will certainly be improving your credit. A positive credit history would make room for better finance options. Debt consolidation in most of the cases is a good idea. But you need to be disciplined with your finances, henceforth. So, when you have finally opted for debt consolidation, no more loan borrowing. You don't want to get deeper into debt. Without a plan and self-restraint, debt consolidation won't work. Debt consolidation with low interest rate would apply if you have only one thing in your mind: getting out of debt. Permission is hereby granted to reprint this article as long as proper credit is given, including the information handlings. About the author, Francisco Rodriguez. His debt consolidation necessary. http://www.getdebtconsolidationhelptoday.com